What's up, guys? I'm Mike from StockedUp. In this video, we're going to be going over what's going on in the market right now and what exactly, why the market is down so much and what the causes are of it and what's the best play right now. So, there are a couple different reasons the market is down. Some people are saying, there's a catalyst for a potential like socialistic president, but that's not really why the market's down. The market's down is because of the coronavirus. The virus is spreading rapidly, and obviously that hurts individuals and obviously affects local economies. But on a more macroeconomic scale, people aren't going to work, especially in China and Italy, they're affected pretty bad. People are dying. It affects imports and exports and trade and travel, and it has a big effect on the larger scale of things. So obviously that affects some companies fundamentally, United Airlines. They are in airline stock. So people are going to be traveling less, like Carnival Cruise. Obviously it affects them fundamentally, but we are in a global economy, so all companies are kind of they're all affected. So watch this video to the end, and we're gonna go over some good plays too. But really, the market started to fall legitimately on Monday and Tuesday this week when it was right around here. And what's been happening the past 2 days is just a compound effect of selling. The market drops 1,000 points, people start selling. The market drops 1,500 points, and then people realize that, and they start selling, and now the market's down to 2,000 points, and then now even more people start selling. Now it's down to 2,500 points, and even more people start selling, and it's just a big compound effect all the way down to 3,000 points because fear is contagious. You guys realize that in 4 days the market wiped out 6 months worth of gains. I mean, it's crazy. You could see that it took literally since what, the beginning of October to get all the way up to 340, and it took literally 4 days to go from 7 days to go from 340 to 297. So pretty much the best thing to trade right now is to sell premium. Guys, look at this. The implied volatility on the SPY is sky high. I mean, it's crazy. I mean, you haven't seen implied volatility levels like this for the past 2 years. This is the highest implied volatility in 2 years. This is the fastest drop in market history. This is the biggest point drop in market history. The quickest point drop in market history. The best thing to do right now is to take advantage of everyone's fear, and to do that, you could sell put credit spreads. Puts are extremely overpriced right now. Implied volatility is super high. It's a perfect mix for put credit spreads. If you don't know what that is, pretty much, if we look at a SPY option right here, let's say March 13th, for example, if you look at a 285. Let's say you look at a 285 strike put. Okay, it expires March 13th. This put fundamentally has no real value, right? The SPY right now is at what, 297, and you could sell a 285 put for $600. In the beginning, on Friday, this same put that's now worth $600 was worth $24. So you could short this put pretty much, and as long as SPY is below 285 or is above 285 by March 13th, you keep the whatever premium you sell. So you'd probably want to sell the 285 put and buy the 284 put. And let me see. So yeah, you'd sell the 285. What's it? Let me see. 284. Okay. All right. So the options right now are extremely overpriced. You get pretty good returns on these. Probably around 30 to 40% depending on what strike and expiration you pick. But the second the market rebounds, the SPY puts are going to get killed. So think about that. You could sell shorter term SPY puts like March 6th. That'd be good too. March 6th, March 13th. Those are all good for selling puts. Pretty much what you do is you go to the options chain. You go and pretty much you sell a put like the 285 and you buy the 284. You have to have spread trading enabled, and it can be a little risky, but know that it is a relatively safe trade. Pretty much you sell one put and then you go to a strike lower than that and buy that. So you'd sell the 290, buy the 289, sell the 275, buy the 270, sell the 294, buy the 293. Sell the 290, buy the 289. You get the point. But pretty much that's the safest play right now in terms of what I think the market's going to do tomorrow. I mean, you guys realize that the drop on the market is never seen before, especially in recent years. I mean, this is a crazy drop, and we are yet to have a real pullback. So I definitely see a strong possibility of a pullback tomorrow. Is the market going to be up 5% tomorrow? Probably not. The market can very well be down another 3%, 2%, depending on how bad it gets. But the SPY broke below 300 today in the last 5 minutes. So things are not good. To keep it simple, things are not good. The coronavirus is spreading. There's a lot of fear, and the best thing to do to take advantage of that fear is the put options on the SPY right now are overpriced. You could short those through put credit spreads. That's the best move. It still does have some risk, of course, but that's the best and safest move. The further out of the money you go, the better. So yeah, SPY put credit spreads. I'm looking for the market to rebound a little bit tomorrow, but of course we'll have to see what happens. There's no major catalyst coming out overnight or in the morning for the market. However, there can be a black swan type thing, which is pretty much an unexpected event where the Fed steps in or Trump makes a comment that can potentially bring the market up. So we'll have to see what happens. But safest move right now is put credit spreads. Thank you everyone for watching this video. Let me know in the comments down below what you guys are looking at for trading. But other than that, thanks for watching.